Really? Really? You brought your phone?
Should I answer it? All
yes.
Right. Okay.
Get rid of that sound.
Hello? Yes?
Tell them we're taping a show.
DeLynn says we're taping a show. Really?
Hang up.
Just a minute. Yes, you don't say. You've got to be kidding me. Oh my gosh.
You have an English accent.
I do. Okay. All right. Really, you don't say. My goodness. Well, have a great day. Bye-bye.
Who's that?
He didn't say.
How about that? Oh, jeez. See, you answer one, and now they're telemarketers.
All right. I got this. I got this one.
No one's all hang up.
Hello. Thank you for calling the party which you wanted to speak to.
I know her.
Yes, ma'am. Yes. I understand. Yes, I know. Yeah, I know you're under contract. I understand that. Yeah, I'm at the studio right now. It's really not a good time, but I know you have questions about your closing costs. Yes, there will be taxes. Yes, you are going to probably need to bring money to closing. More than likely. No, we cannot waive the underwriting fee. I am sorry. That is the law today. It's different than it used to be. The Good Old Boy Network is gone. Yes, ma'am. Okay. Whoa. I know. I can't hear.
Go over them with her.
Okay, DeLynn's gonna go over them with you. Okay, can we do this after the show, though? Yes, ma'am. Okay. I gotta go now. All right. We'll go completely over your closing costs. I promise, and you'll understand them completely by the time you're done. If you could just give me a minute to talk. Okay. Thank you. Bye-bye.
Are you buying a house, and do you have questions about your closing costs?
Wah, 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 wah. We got an app for that. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV, your local market update.
Wah, 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 wah.
That's my line.
Charlie Brown's teacher, and I am DeLynn Gaston. Thanks for joining us today. So, do you know what kind of calls I get all the time?
No, I just have this fear the phone might ring again during the show. If that lady calls back,
answer.
Oh, we have to.
We have to push.
Always, wait, remember
this phone doesn't have a voicemail.
It's got a little rotary.
Yes. What a lovely little phone, though.
You know what? A lot of people ask, how do you work this thing?
Yeah, the kids, right? What is that?
Yeah, what is that? What's that little dial thing?
How's that go?
Yeah, it works out good.
Yeah, I know.
So what are we going to talk about today? Before that lady calls back and asks about her closing costs.
Maybe closing costs. The calls we get all the time. Some of the biggest questions, I guess, that we get when we're talking to a new client is, what are my closing costs?
How much am I going to have to bring to closing?
How much am I going to have to? And that's the bottom line. That's the thing. I was just going to say.
That's a great question.
That's
a good question,
And there are two different answers, right? What are my closing costs, and what do I have to bring to closing? Two different answers. So. Right. Most of the time people will say, what are my closing costs? That's not really what they want to know. What they want to know is, what am I going to have to bring to closing?
Yeah. How much money do I need?
Yes, how much money?
And by the way, it can't come from your mattress in today's world. That's the big thing. People don't think, oh, I'll have it by closing. No, you have to have the money now, today,
right.
or
They don't want you cashing your paycheck and walking to the closing.
No. Or I'm getting a job next week. Can we count that income?
Yes. No.
Yeah, no.
No. Yeah, no, that doesn't count either. So what we're going to talk about is the factors that go into the bottom line. What do I have to bring to closing? Because it's not just closing costs. It's, first of all, the balance of your down payment.
Yes.
If you're putting, 5% down and you only gave $1,000 so far, you're going to have to bring the rest of that to closing. If you're putting 10% down, 20% down, no matter what it is, you got to bring that to closing.
Yes, there's no way around it, is there? So are we going to go over
the next things,
explain what items could be potentially on what they call your HUD-1 settlement statement at closing? The day you found your dream home, you put an offer in, it's all accepted, you got the perfect interest rate, you're all excited, the family's all packing up, and then you're like, oh, I got to go to closing.
Yes,
and then you got this big settlement statement with all these items on it, and you're like, what the heck is all that stuff?
And you hear closing cost horror stories all the time.
Yeah, but I think it's a lot different. Yeah, but all the time. It's a lot different in today's world than it was back in 05, 06, 07, back in those days where, all of a sudden the title company or your mortgage lender or anybody, the processing company, could slide this bogus new fee in on the HUD
at the last minute.
Yeah, because now there's tolerances that don't permit that by law. So there's actually
some of the good things that have come out of the real estate collapse is the disclosures and such.
Oh, absolutely.
Yes, it's a lot more. I tell people all the time, stop. It used to,
can I phone a friend?
Applications used to be about 10 pages. Now they're like 60 pages.
Yes. Yes.
Stop.
Oh, see? I made it ring. I love this phone.
Anyway, so we're going to talk about some of the closing costs. Just some things that you should expect that have to do with money to bring to the closing, at the closing. So what do you want to start with?
I don't know. Why don't we start with the fees that we believe to be on it? So we're going to assume here we're working with a $100,000 loan. So for some of you that may be the Taj Mahal, for some of you that may be the ghetto. So, but it's a good, easy number for us to work with. So, so we're going to assume a $100,000 loan and closing costs and about what they should be. And they're going to vary slightly by your lender. So, one of the beautiful things about this country is you can shop around. But remember, there's a lot of fees that are what they are and they don't change. And one lender could forget to disclose it up front and give round numbers where someone else didn't. So the fees are what they are. And there's really very few fees that your lender can even control anymore in today's world. So keep that in mind.
What you're going to find is lender to lender, the fees are not going to vary very much at all. Like they used to, again, like Barry said, in the old days when people were just throwing, fees in. It really isn't. The majority of the fees are title, and it's not that it's the title company, but they're fees having to do with title. The lender fees normally are very little. There's a lot of people who are involved in getting a transaction from contract to closing. Everybody gets paid for their portion of it, for the little bit that they do on the file.
Even the people you don't even know exist.
Right.
They're making money. I want that job.
They're not making money.
Like right
They're just
now.
getting paid for what they do on the loan. Now, there's none of them get paid an outrageous fee, but there are a lot of people, so a lot of little things that add up. Starting with the underwriter. The lender fees, underwriting fee.
The underwriter fee is typically about $895 is what we guesstimate.
Somewhere between $800 to $1,200 is.
And what is that underwriter fee? Well, that person that's behind the scenes that you as the consumer will never ever in your life probably ever get to talk to unless you meet up with them at a bar. They're the ones that are underwriting the file. They're the ones that are looking at your documents, verifying the information you have, and they're the ones that are sticking their neck out to make sure that you are who you say you are and that you're good to go. And
they have to hold certain licenses and things like that to be able to underwrite a file, and they are following the guidelines that are given to them by Fannie Mae, Freddie Mac, FHA, VA, depending upon what loan product you're going with. They have to follow those guidelines. Everybody uses the same guidelines. Every lender, every bank, every credit union, everybody uses the exact same guidelines.
And that underwriter is putting their neck out because if this loan defaults later, it's a reflection on them because they approved your loan.
Right.
And so they go back and they are checked and
So they
double-checked.
have to be very, very careful.
So they do.
The next one on the list is the processing fee, administration fee, something like that. Sometimes it's called.
Yeah, usually a processing fee is
vary.
Yeah, they can vary. $350. I've seen $550. I've seen $800.
Right.
I've seen $1 million. No, I'm just kidding. You
$350 to $500 typically is what a processing fee is going to be.
And really, that's the person that is behind the scenes that works with your loan originator, that is gathering the documents and bringing them to the underwriter, and that's their fee.
Verifying all of the stuff, right?
Yep.
That's what a processor does. The next one is the appraiser.
What's the appraiser, DeLynn?
The appraiser.
I'm going to give you a shot at this.
And this is actually, in most cases, to be perfectly honest, this is a fee that is paid up front, not at closing. I just wanted to say that so that people understand. Only because the appraiser gets paid when they do the job. I know. When they do the job. They get paid when they do their job. They do an appraisal normally at the beginning of the transaction to make sure that it can go forward.
Yes.
And they get paid when they do the job. So.
And they want to get paid whether you close or not. So
because they do their job.
I know this will be shocking to you, but all valuations don't come in. You know, people may ask $100,000 for this house and it's only appraising at 90. That's not the appraiser's fault. They still want to get paid. So in today's world, you know, that fee is charged up front through a third party, and AMC as they call them, and then they order from the appraiser.
And you as the buyer, you are protected. That is a protection for you so that you're not overpaying for the house.
Yes, it is. Yeah. So the good old boy network
is gone.
It's over. It's done.
It's all third party now.
And you want to talk about this one? This is a big one.
Credit report?
You look at me like, oh.
Credit report is big. You know, they're like $20 or something.
They
Anywhere from
20,
you know.
Some are 60s.
It depends on what has to be done.
Yeah.
Sometimes when extra updates and things like that, if you're getting things fixed or removed from your credit and we have to go back several times, sometimes they're called updates or whatever, they cost a little bit, $2 to $3, and it all kind of adds up. But
yes, it does.
Somewhere around $20.
But DeLynn, I just pulled one on freecreditreport.com. Why can't you use my credit report?
I cannot use that. It has to be used by a mortgage credit report has to be pulled. That is different from a consumer credit report.
And it must be from the lender that you are working with.
Yes, yes.
So your annual credit reports, your free credit reports, all those do not count. So you do need a new one.
But they are a great way to check your own
What
credit.
about your closing and settlement fee? That's our next thing. Closing and settlement fee is from the title company.
Right. And for what it's worth, this is noteworthy right here.
Noteworthy.
A seller in the state of Florida, typically your seller will choose the title company who is going to be doing the closing. And the rest of these fees, for the most part, have to do with title company and title fees.
And DeLynn, what is a typical settlement fee that we see out here?
They're usually around $500 or so.
500, some
typically,
$550.
some a little more,
but you know
some a little less.
But here's the thing. It varies a lot by state and title companies. We've noticed that if you're buying an REO property, which is a bank-owned property, they have their own title companies they choose. And those guys are working hard, and I'm not saying they don't deserve it, but they typically charge.
Boy, do they work hard.
Yeah,
a little bit more.
But
boy, they deserve every penny of it.
They charge more because the extra steps that are done with a foreclosure process that they have to clear, et cetera. So
I also wanted to note here, too, for our people who are moving in from out of state, if you're moving in from a state that maybe you're used to closing with an attorney, Florida is not an attorney required state. We do close with title companies here. You can hire an attorney. By all means, you can hire an attorney, but that is an extra fee to do your closing.
Yeah.
So
okay. Now, let's talk about a title search fee. That is the next one on our list. Again, that is charged by the title company. And the search fee is basically usually done by a third party, not necessarily by the title agent itself or their underwriter, which basically is looking at defects in titles. They're looking for liens. They're doing a search. They want to know that some big Indian chief doesn't still own your land that you are on, or so forth. Or if there's a utility lien, or an old mortgage, or an old contractor dispute.
Yeah, the roofer that never got paid or something.
If you bought the house, you could be liable for that
Right.
Because it's attached to the property. So,
and typically they go back between 30 to 50 years. Everything, and it's not the house, remember, because some people say to me, well, the house was just built 3 years ago. It's the land. They will go back and search everything on that land for the last 30 to 50 years. I was wondering how long it was going to take you to either bring up sports or start singing. He just has the stuff going in his head all day long. Anyway, so let's move on. Going right along with your title search, there's a fee for a title examination.
Well, yep, there is.
And then there's title insurance.
Yep. So let's skip over exam because actually you cannot. They're no longer allowed to charge an exam fee.
So they just put it in the search now.
Yeah,
right?
They just throw it in. It actually usually goes in as part of the settlement fee. It's bundled in. So they can no longer line item it separately. So you probably won't see it. If you do, call somebody. But
title insurance.
Your title insurance itself is based on the purchase price.
And people will say, why do I need title insurance? I'm already getting house insurance.
Yeah.
Different. Title insurance is protecting you, like Barry was saying, from any defects that were on the title. So that if the title searcher missed the fact that, a roofer didn't get paid 5 years ago or something like that, and he's got a lien on the property, and maybe the title searcher missed it. When you buy that house, technically you're liable to pay that bill because now you're the homeowner where his roof went on.
And actually, here's the cool thing about title insurance. It's probably the only title insurance premium you'll ever pay in your life that you pay one time and you're covered forever. You ever thought about that? And you know what? It's so funny. I've seen title claims come up years and years and years later. People, like, well, what do I need that for? Well, you have to have it for your lender. It's required because the lender doesn't want that liability out there.
Right.
So, and yeah, you pay one time and you're covered. How cool is that?
I remember years ago, quick story, when I lived up in Connecticut.
You lived in Connecticut?
I did, for all my Connecticut friends. Hey. The Indians actually wanted to put a lien on the entire town of Shelton, which is a very nice community. And because people were running around at the last minute trying to put title insurance on their house if they didn't already have it for those people who don't have a mortgage, because the Indians were putting a lien. They're saying, this is our land. This was our land, and this was our...
I've seen that.
So we offered them Bridgeport. We said, you could have Bridgeport, but not Shelton. That didn't go.
Did you know I can dance too? Come on,
yes, Barry, our dancer from Dancing with the Stars. Anyway,
thank you very much.
Finishing up on our closing costs, the title endorsements to the title policy.
The endorsements basically are things that are in addition to the normal title policy. Maybe if it's a planned community, maybe if it's an ARM. In Florida, we have this crazy Alta thing, that they put on. So it's additional. You have a base title charge, and then there are endorsements that go on top of it. So it's part of your title insurance.
And that is also based on loan size because of some of the other...
usually they're flat fee. Most endorsements are flat fee.
Other than the Florida Form 9.
Yes, that one
which is based on a percentage, which is part of the endorsement. So that could vary a little bit. The other things that do vary based upon, and this is another Florida thing, we have something down here called tax...
Florida's weird.
Doc stamps and intangible tax. Those are two taxes that are state taxes that are based on your loan size.
Yep.
Other states don't have those. Florida does, unfortunately.
I'm just waiting for that to ring again. It's been quiet.
And we have to pay them. So those are going to vary based upon your loan size, but they are 2% and 0.2%, 0.35% of your loan amount, so that you can figure those out.
Did you know there's a cord on
the
this
last
thing?
Two things that are on here? He's just,
Look at this.
You want to do either one of these last two things, our survey or our recording fees?
Okay, we can get those on before break because I know the producer's going to call us and tell us to shut up in a second.
Break.
So, did you talk about the doc stamps?
I did.
And then the survey fee. The survey fee is basically he's not going out saying, "Hey, do you like this house? I'm taking a survey." Survey says no. He goes out and he does maybe a meets and bounds where they go out and they find your property line.
Right.
And most of it is all done via satellite. So when you go home to your new home, you'll see little stakes in your yard that Shows you about where your boundaries are.
And this is something that you're definitely going to want to do, because if you want to put up a fence, or if you want to put an addition on your house, or put a pool in, or something like that, you're absolutely going to need a survey.
And the last thing you want to know is that your neighbor's fence is in your yard and your property, because that's a problem. Or your pool your pool is not set right because it didn't meet the setback requirements.
So far from the property line.
So
right.
those are the
Real
boundaries.
important things.
So yeah, and that can be about $300 for a survey.
Estimate.
And then of course we have the recording fee.
All these mortgage papers that you are going to sign at closing, well, not all of them, but some of them, have to get recorded in the county land records for whatever county you're purchasing your home in. So there are recording fees. They don't just take all of these and put them in the land records for free.
They don't make that.
They usually charge like $20 for the first page and $10 for every page thereafter.
Okay, she's wrong in the numbers, but you get the gist of it.
I don't know what it is. It's about that. All total, it totals up to somewhere around, somewhere around $200 bucks or so.
There it is. It's for you. Hello.
It's for me.
Yes.
Time to go to break.
Yes.
That was easy.
Thank you very much. Okay, we'll go to break.
It's time to go to break.
We'll be back right after this.
Everyone's story is different, so why be limited to just one or two options? With Norcom's Norflex Home Loan, you're given the flexibility to tell your story. Pick your terms from 8 to 30 years, all while maintaining a low, fixed mortgage rate. You can pay off your loan more quickly or choose a term based on your budget and timeline. Whatever you do with the Norflex Home Loan, make it part of your financial plan. Norflex. Short-term, long-term, your terms. Apply online at norcommortgage.com.
This is one bee that loves going to the dentist because it's made for you and me.
My name is Dr. Becerra from New Tampa Pediatric Dental, providing a comfortable atmosphere in early dental care. Gives kids a great start for healthy teeth and gums for life.
When I go to Dr. B, they don't do anything to hurt you.
I used to be afraid, but I'm not now. I'm not afraid of the dentist anymore. I love to see Dr. B. Call New Tampa Pediatric Dental today.
Revolutionary in his field, Dr. Bonatti created, perfected, and patented the Bonatti spine procedures. Using his genius, Bonatti invented precise tools necessary to minimize surgery, scarring, anesthesia, and recovery. So successful are the Bonatti spine procedures, they consistently reflect over 94% patient satisfaction. 45,000 successful procedures have been performed exclusively at our location. Nearly half our patients suffer from failed back and neck surgeries at other facilities. Bonatti succeeds where others fail.
Mortgages don't need to be complicated. At Norcom, we're here to guide you through the process. By following our tried and true path to success, we make homes happen. To get started, give us a call or apply online. A trusted mortgage consultant will reach out to you to find out what your goals are. Whether you're in the market to purchase a new home or refinance your current home, we are dedicated to helping you achieve your goals. At Norcom, we'll provide a best-in-class customer experience. Once a plan is established, your mortgage consultant will analyze your income, assets, and credit profile in order to customize a plan for you. If you're planning on moving in the next few years, we might suggest an adjustable rate mortgage to be the best option for you. If you're a veteran, we'll get you started on a VA loan with 0% down. And if you're thinking long-term, a 30-year fixed loan might be your best fit. Our professionals are up to date on market trends and will help you make the best decision in choosing your rate. After we've found the program that's best for you, we'll then need to collect some information, including pay stubs, bank statements, and tax forms. Our underwriting team steers a loan through the approval process to verify that all the information you've provided is correct. As the underwriting process is taking place, an appraisal is ordered to determine the value of your home. A professional, local appraiser specializing in your area will determine the home's value. The last leg of this journey is closing your loan. While taking care of any last-minute details, our closing team will work on scheduling your closing date and location. It's that simple. Thank you for taking some time to walk through the mortgage path with us. Remember, we're always here to answer any questions you may have. It may seem intimidating, but here at Norcom Mortgage, we make homes happen.
Hi. We're back. And there's the phone.
There it is. I missed it.
Shut that thing up. Just hang it up. We
How do
we
you
didn't
go?
finish. We have
Where's
to talk
the
about
mute-
the taxes and
is
the
there a-
escrows.
Is there a mute button here?
I know.
Wait,
Forward it to
All
voicemail.
right, here we go.
See, in these
Watch this.
old-fashioned phones. Our producer just hang up.
There. Okay.
Wow, that was who?
You just never know who's going to call. Good golly.
We just have so many friends. It's all from your dancing days.
Oh, yeah.
You just know everybody.
Yeah, apparently.
Anyway,
do we want to wrap this up and give people an idea how much they're going to bring to closing?
So let's
Before the phone rings again?
Bringing up, so the three parts to what you have to bring to closing: the balance of your down payment, your hard costs that we just went over, your actual closing costs. Those are your closing things. Those are going to total somewhere between $3,000 to $4,000, typically something like that, depending upon your loan size again, depending upon what state you're in. But just
depending on if it's a foreclosure.
Depending on if it's a foreclosure, that's something we didn't even mention.
Yeah. Have you ever thought about
if it's a
being in
HUD-owned
politics?
property or something?
What are your closing costs? I don't know.
If it's a HUD-owned property or a government-owned property, Fannie or Freddie.
There's just a lot of variables.
There's definitely more things that go into it.
I am making fun of you
Your
because
lender,
it's the truth. People don't understand that.
Your lender will go over all of this stuff, or they should anyway, with you in detail. But the third part of this that a lot of people forget about is the escrows, and that is the taxes and insurance. The taxes, the insurance on the house are prorated. So,
yes. And this is your money, and basically we're putting it's being put into account that the lender's holding on your behalf.
like a little savings account.
Yeah, it's like a savings account. So when your taxes are due, they can pay them. When your insurance is due, they can pay them. If there's MI insurance or PMI, it's all going to be
going to be there.
And that's going to pay the premium.
And when people
for
say
that.
to me, well, how much is that going to be? This is like a crapshoot.
Yeah, it's really...
It totally depends. If your
depends.
insurance on the house, is $3,000 a year, it's going to be higher. Your taxes are $5,000 a year, your escrows are going to be high.
And depending on what month
you're closing
and when your tax bill is due. So there's all these prorations going on. There's a lot of moving parts here, DeLynn.
Typically,
This is why you get calls all the time.
This is the part that I get calls all the time.
Don't call now.
But this, please, this is the part that really is, when you call me and you say, well, what is that going to be? And I'll say, my first question is going to be, what are the taxes on the house? Because I can't give you those answers until I know and what the insurance is going to be on the house. So we'll say, well, let's call some insurance companies and get some estimates if this is a house that you're really interested in and you're a little concerned with the insurance. So that the first year on all mortgages, just like with your car insurance, imagine this, is paid in advance.
Really?
Yeah. So if you pay your car insurance quarterly, and you're paying your car insurance on January 1st, it's not paying for the quarter that just passed.
Really?
It's paying for the future. So you, just like car insurance and everything, other kind of insurance.
You should sell insurance.
It's paid in advance. And on houses, it's the full premium. The first year's premium is always paid in advance. So if your insurance is going, if you get a quote for $1,500 a year,
let's use $1,200
you got to pay,
because that's what our estimate
says. Okay, $1,200 a year. Then you have to pay $1,200 a year at the closing because the first year's premium is due there.
That is true, but also remember, if you're putting money into an escrow, you will pay that premium plus maybe another couple months because they want to get your escrow account started.
So that next year, when they get that bill for the next year's insurance, they have all of the money they have to pay.
If your insurance is $1,200, you could conceivably bring in $1,400, $1,500
to the closing
just for that number and just to cover that. So that's important.
In addition to that, then there's a proration of taxes. And again, this definitely varies state to state. In the state of Florida, taxes are due once a year. They're due in the month of November. So they're going to prorate it.
Is that statewide?
That's statewide.
It is statewide. I didn't know
but
that.
other states
I knew we were doing November
pay it like twice a year. Some of them pay it quarterly. That kind of thing. So it definitely varies. And we have people who watch us out of state.
But even people who've made, there are payment plan arrangements that you can do with the county. Even if you have that, it doesn't matter. The lender's going to make you have a full year paid in full. So, so keep that in mind. So,
So that's definitely going to vary based upon what your taxes
So in
are
our
in the house
example
that
here,
you're interested in
we
buying.
use the
I used,
$700.
I think, $1,500.
$1,500. So
And I just put 6 months down.
and
Just
so basically, if we were closing in what? That would be closing in like May.
Right.
If we closed in May, you would need 6 months because your bill is due in November. So 6
They're gonna
months.
prorate
It's simple
that.
math. 6 months from May to November. It's proration.
if you're refinancing your home, your existing lender, chances are
Somebody
they
must
are
be thinking about me.
already.
My nose itches.
Chances are your existing lender is already escrowing, in which case you're going to get that money back. So it's not like the lender's going to keep this money. They return it to you if you refinance. If you're purchasing the home, then it's prorated again. The seller who owned the home for a portion of the year will pay the taxes for what they own.
This is
You're only
exhausting.
going to pay them. I know. There's
No
a
wonder,
lot to it,
no
and we
wonder people are
understand.
confused. Wow, I know numbers, and it's
And it's
like,
not easy. That's why when people say, well, what are the closing costs? Well, that's an open-ended question.
No. And then what about this per diem charge? Does anybody know what the heck's that? Who wants to pay for a per diem? I didn't order their per diem.
Did anyone ever say to you, oh, close at the end of the month, so this way here you don't have to pay a lot of interest? That's what that means. It's interest per day on the loan. I explain this way. If
All
you
the
go
time?
all the time, if you go to Sears and you buy a washing machine and you walk out and you put it on your charge card, you walk out the door with that washing machine in your hand or in your truck, interest will start ticking right away on your charge card because you put that on your charge card. Well, in this case here, the merchandise, the washing machine, is your mortgage loan. It's your loan.
That's
so
a
the
big
day
washing machine.
you get that loan, interest will start accumulating on the loan.
Yes, it will.
So from the day of closing until the end of the month, they're going to charge interest every
And
day.
in the example that we just showed up on the screen was based on a 4% rate on $100,000. It's about $12.50 per day.
Right.
So every day is costing you $12.50 in interest. So,
Right, exactly.
so that's the simplest way I know how to explain it.
Yes.
So.
There is a lot to it, and we totally understand that. We hope that this can at least shed a little bit of light for people. We're happy to go over it if you want to talk more. I'm also, if you want a worksheet, I have a fillable worksheet that I'd be happy to shoot over to you. Just shoot me an email, info@Easy Mortgage Answers.
info@easymortgageanswers.com, but
.com.
Hey, we got an app for
We all
that.
have to do that, right?
Yes. .com.
Yes, but there has to be an app for that, but
Yes,
we'll work on that too. But we'll shoot you an email with the worksheet.
And if you get the worksheet, that'll probably help you, give you an idea.
Mm-hmm.
But work with your lender, they should be able to explain this to kind of like we did, and hopefully you won't get phone call interruptions like we do here on the show. So
what else do we have to talk about? Our upcoming events, we always do. You know us, we always got something going on. First of all, I want to say thank you out there to all of the supporters, our local supporters of our local Dancing with the Stars. We had our star Barry, who was a dancer in...
I was a ballerina.
last week in the Dancing with the Stars. They raised a lot of money for the Junior Service League, and it was a great time by all.
It was.
And
I'm glad it's over.
And for a wonderful... Yeah, he's very glad.
Because I'm done with dance lessons now.
Because the shimmy thing, that was a little...
I got it.
Your partner, she did it way better than you.
I know. I saw the video.
Saying.
I saw the video.
Go to Facebook. You can see the video.
She's a professional. I'm like,
It was beautiful. She was gorgeous. But anyway, so what else do we have coming up? A lot of stuff that are still coming up.
We've got the Grinch event December 12th, which is a charitable event that we're still seeking that perfect local family that we want to sponsor to help out for the holidays. So it'll be a big event over at Seven Springs Country Club. It'll be food, dancing, DJs, photo booths, fun stuff. It's a great night.
It's a wonderful night. It's a great date night. It's very inexpensive. Tickets are only $20.
$20, and you can get them online right now at WPBA.
That includes food, dancing, everything else.
WPBA.biz.
WPBA.biz. That JeffDunham.com thing. But anyway, if you want more information on that, please email us again, and we will be happy to shoot you the flyer on that. If you have a business, post it for us. Spread the word on that, because we want to really raise a lot of money for our local family.
We want to help out with all the community events. You know what's funny I noticed here?
What?
All right, look at this.
The difference.
Yeah,
let's move this out of the way.
Let's look at technology. And then there's voice texting.
And not only that, this is a computer too.
Yeah.
I know.
It's my iPhone 6. So
I don't know. I guess that would be moving forward, right?
Yeah.
The world and us.
Yeah, we're definitely made some progress.
We thank everyone
But
for joining
cool?
us.
I don't know how to mute this.
Apparently he's not letting. Yeah.
This one's on mute, so yeah, I know you've been calling me, so I'm not answering this one, but this one doesn't go away. It just
no,
keeps
it doesn't.
ringing.
It just keeps ringing and ringing and ringing.
So anyway.
Anyway, next week more on phones.
Yeah. Your phone update.
And this would be the new iPhone 6.
Because we can't talk about the Bucks because they're not worth talking about.
Oh,
anyway,
yeah.
that's another story.
What about any other sports people doing good?
Hockey's doing great. It's all fun. Let's go Lightning.
Let's go Lightning. Oh, the producer
Dallas.
is yelling out Dallas.
The Cowboys lost in overtime this week. A nail biter.
They're still in first place.
They are still in first place.
In first place, he's yelling.
Yeah. They are in first place.
All right, we need to close.
Yeah.
We thank everyone. Please share the show. Get it out. We thank you for your support.
Facebook, Twitter,
All that.
YouTube, LinkedIn, and just share it.
All of that.
We love you guys. Thanks for
joining us. We are today and every day, like phones.
Excuse me. Moving forward.
We'll see everybody next week.
Yep. Okay, if I hang up, what happens? Does the show go away?
Goes away.
And that's it.
Bye.
Once we go, it's like one big click. Goodbye.